All right, I'm just going to go start with the numbers. For both headline and core, the estimate is 3.1%, obviously above 2%, highest read since back in February. Does that mean anything, either for the Fed or for the markets? I mean, it's pretty much priced in that they're going to cut in this upcoming meeting.
Yeah, I think if we get numbers that meet that consensus expectation, that doesn't change next week at all. Of course, the first thing we do is dig into the details of this data, looking for any sign that we are seeing tariffs pass on to higher goods prices. But I actually think the more important details of this reading are going to be what happens with services. We've seen some stickiness in core services inflation, but I think that should be slowing.
All right. We just did the story right here. A number of announcements, 16,000 at one company, a couple hundred at a different company, but just different parts of the economy, we're seeing workforce reductions. How does the Fed weigh that trend, even though they don't have the jobs report, along with the fact that inflation is clearly stickier than they thought? And when you look at some of the areas from the August report, because that's the last data we have, a lot of it's in food and things that people eat. I mean, it's things that aren't very likely to change. Yeah, and there definitely is this divide among Fed officials, kind of like there's the divide in the market, where there is the group that is more concerned on the labor market risk. Of course, that's what got them to be cutting again in September. But then there's the group of officials that are still more concerned on the stickiness to inflation. But with this lack of data, of course, we'll see what we get this morning. I think you act according to what you last knew, and what you last knew in September was that the labor market risks were looking a bit worse. And if anything, we had not seen the degree of tariff pass-through and inflation that we were expecting over the summer. Maybe the inflation story looks a bit better, even if we're not back at 2% yet. All right, so everybody's expecting a cut. I'm assuming you're expecting a cut. Does it matter if it's a dovish cut or a hawkish cut, either for the markets or just any other part of the economy? Because obviously everybody's been waiting for this Fed decision and a lack of other economic data. A lot of CEOs, a lot of boards, they're just missing some information they would normally use to make their decisions. Yeah, of course. And I think it's going to be hard to get maybe too hawkish or too dovish of a cut next week, just because the guidance from the Fed is not going to be much guidance at all, probably. They're like us, kind of flying blind. There's not really a whole lot of guide that they can give us on expectation of future rates if they don't have any data. All right. Does it matter that the AI trade and AI investments seem to be really powering the market? If you look at the Atlanta Fed GDP tracker, almost 4% growth for this quarter. I mean, that's really strong growth, considering that we're worried about so many different parts of the economy, whether it be the labor market, lower end consumers. I mean, there seem to be some very troubling signs out there, yet growth just seems to continue. Yeah, there is this story of maybe a very bifurcated economy right now, where is that bad, though? We say it all the time without real context. Is that good or bad? Yeah, I would feel pretty uncomfortable with that. And I think we see it in the jobs data, we see it in the consumption data, we see it in GDP data, where growth is just increasingly narrow. It's driven by just a couple sectors, just a couple people, higher income consumers who are spending. And that's not a very comfortable place to be, because that is an economy that's pretty prone to shocks. You can get much worse, worse outcomes if you see some kind of shock. So if you're saying that, I would imagine there's at least somebody else on the Fed saying that as well. So what about the path forward? Yeah. If this one's baked in, what about the idea of getting another one this year and then 2026? Yeah, I think that December cut is also pretty easy at this point to get, or at least how I see the calendar playing out. Hopefully the government will reopen and we'll have data by then. But as we're looking forward, we'll get the September jobs report that we've already missed. Once we get the October jobs report, though, I think that one can look pretty soft. We have the shutdown, we have Doge workers that are coming off of payrolls. It's probably easy enough to get them to cut in December. Where we're going into next year is more of the question, but we do think the labor market is weakening, and that's going to be the primary driver of more cuts into Q1.